All right. So this is for all the stock and bond people out there that love to trade that stuff. These day traders, the fast money movers. Great, they're good. But this is why I believe my rules of investing, why I think real estate's better than stocks. Number one, it's real. I'm a very, very, very simple guy. And when I think about investing money, my money, my investors' money, I just want to see something tangible. I want to be able to pull it up on an address, take a look at it, drive it. I want to know that there's 200 people living there, 300 people living there, 100 people living there in an environment where people want to be at, where there's jobs coming in. Real estate has that. You don't have that with the stocks. It's not tangible. It's not real. It's a share. Hell, if somebody would be like, go buy a bunch of stocks right now, you would literally have to go in, press a button, click a button. Like it's not real. It's not tangible. So number one rule of investing, don't lose money with Warren, like Warren Buffett says. But when I think through the day trading stuff, that's why I don't like stocks, the bonds, all that other, the cryptos. Real estate's real. So number one. Number two, it cash flows. You can count on the cash flow. You know it. Matter of fact, we took a look at a property that was built. This property has been cash flowing, making money since 1960. That's when it was built. Great location, but the cash flow is proven. We don't have to worry about that. You have stocks that right now, the average stock on in Wall Street, the average stock on the Dow Jones, the S&P 500 lasts roughly about 7 years. Years ago, it wasn't like that. They were there forever, like Sears, Kmart. All these companies are out of business. Think about that. Real estate, that property, it has been there since 1960s. There's properties who haven't been on the stock market, who haven't even been around, and they're gone now for the last 7 years. That's the difference. When you think about investing in some of these people who are day trading and trading, their money is they're guessing. And that's what you want to stay away from when you talk about investing money. Next, you have diversification. I'll just put diverse. You have diversification. So it reduces the risk when you can say, okay, we're going to buy one address with 200 units, 250 units, and we're going to do it in San Diego. And the next property we're going to invest our money into, that one is 150 units, and that one's in Austin. The next one is 200 units, and that one's in LA. The next one is, you get my drift? You have diversification now. You can have diversification in stocks. Problem is, you can't take a big enough position in a stock to really make it make sense. So you literally have no diversification. And if you do have diversification, you got all these little stocks here and there. You're watching them, you're playing. That's not investing, man. That's gambling. That's different. You don't have that. You can mitigate your risk through diversification, through scale and your location. Next, yeah, it's an inflation hedge. Real estate hedges for inflation. Now we're talking about big properties, right? So, but here's the difference. When inflation happens, the cost of whatever can be bought, that value goes up. The cost of the buying power of your dollar goes down. So less people can afford a house because the prices of homes have went up through inflation. And that's what's going on anyways. If you take a look at it, like the housing, there's all of stop. This is probably the worst housing like so far as applications to buy houses, mortgages, all that other stuff since 2008 or before 2008. It's actually worse than 2008, but people don't see it yet. But that said, rents will continue to go up in any inflationary period. Here's why that's valuable. Because I promise you, no matter who wins, whether it's Trump or Harris or somebody after them, they will print money. And how many of you guys want to? I'm willing to bet you a steak dinner at Ruth Chris that within the next, I would say, two presidencies, they will print more money, guaranteed. They're going to do it. As a matter of fact, if they drop the rates and the rates drop all the way down, things are going to skyrocket. They're going to have to print more money. So we know that as just from real estate alone, it's an inflation hedge. As inflation happens, anybody with real assets, they always do better. The stock market does not do that well, right? And last but not least, because this matters and it ties all these other ones together, we'll just call them bennies. The tax benefits. Now, the tax benefits tie all these things together. Number one, real assets like real estate has probably the best tax benefits, whether that's your depreciation, accelerated depreciation. You can do your what's that called? Your cost analysis over the whole property. Uh, Pass that on to your investors. You have your deductions for your mortgage payments. There's like it's ungodly the amount of benefits that the tax codes are written for commercial level multifamily real estate. It is ridiculous. So you don't get those same tax benefits with stocks. Let's say you have a bunch of stocks right now and you think you're going to make $1 million. When you sell or trade your stocks, that's ordinary income. You get taxed as ordinary earned income on that, period. Now, when you sell your real estate, you can 1031, you can kick the can down the road, you can refinance, take that money out, that's non-taxable, and then still turn around and sell your property and 1031 the gain of that all the way down the road. So now you have no money that you took out on a refi, and then when you sold, you 1031 the profit of that, and you didn't pay taxes on that, and you rolled that into the next property. It's ridiculous. That's just one strategy, right? That's like it's like the magic of real estate. But anyways, this is the difference. This is why I said real estate versus stocks. To me, as it relates to the rules of investing, real estate will always win. Why? It's real cash flow. You have diversification. It's an inflation hedge as well as all the tax benefits. If you can play this game better, then you can play the stock game because you don't have all this stuff happening over with stocks and bonds and all the other things that you're playing gold. It just ain't there. This is just better. So my opinion, and my opinion matters. So yours does too. But like I said, if somebody was sitting across the table with me and that's all they did was stocks, real estate investing is if you're gonna put your money into something, real estate will beat it every time. All right, so I hope this helps. Challenge me on this. Like I said, you can put it in the comments. I love to talk about this stuff. I'm not going to make you wrong, but I just know where I want my money. And I'm a simple guy. I like it simple. If you can show me, explain it to me, make it simple for me, that's probably what I'm going to do because I don't want all the drama and chaos associated with my investments. So I hope you have a great day today. Let's get it. Let's go.